For the time being, let's get our next corporate on the show. Thermax, they reported a strong set of earnings for Q4. The company registered a healthy growth with respect to profit as well as revenues. The margins as well expanded a little bit. To understand what went on in the past quarter, what's the way ahead, we're joined by Mr. Ashish Bhandari, the Managing Director and Chief Executive Officer at the company. Hi, Mr. Bhandari. Good morning. Thanks so much for joining in. Well, I think when we spoke last, sometime in the past quarter, you were indicating that maybe the order inflows are petering out a little bit, particularly large orders. What's the scene right now? Are you seeing a prolonged slowness or is there a bounce back? And what does it mean in terms of revenues and margins for the coming year? That's FY24.
Firstly, a very, very good morning to you and to all your viewers, Nigel, and thank you for having me on the show. You've asked three sets of questions, so I'll try and answer them one by one. On the outlook of large orders, I stay consistent with what I shared before. In the immediate term, we don't see as many large orders as we have seen in the past. And the quarter that went by is a good example. Last year, we had two very big orders, one from the refining industry, one from the power industry. And we have nothing of that sort this particular quarter that we closed. Yet, I think the kinds of orders we have gotten, we like the mix. Yeah, we like the base flow and the general strength that we are seeing all around us. So that part is good. In terms of large orders in the visibility, I would say few are starting to form, but they are a couple of quarters out now. Yeah, but there are some things that are starting to pick up. Interestingly, they're not in refining and petrochemical. They are in steel. They are in a lot of the new industries and new applications that we are talking about. And as they form, I'll share more clarity. In terms of margins and what to look forward in the future, the environment that we are going through right now is perhaps the most stable environment that I have witnessed in the last several years. Yeah, demand is reasonably strong. Commodity prices are relatively stable. Yeah, they're not going up or down, and which is something that we like. Customers are picking up equipment, vendors are delivering. So overall, a stable environment. I think if the environment continues, we would like to continue on the trend that we are on.
Okay. Ashish, hi, good morning. We were speaking with a investor yesterday who was on the program, and he was telling us that he kind of said what you're saying, which is that large order visibility is low, but smaller ticket size orders across sectors, it's very widespread. And his view was that this is much more durable. Would you agree with that? And, your thoughts on this?
I would agree. Yeah, and I've been saying this now for maybe a year, that this is a sense of a widespread industry revival in a sense. Yeah, so there are multiple sectors, and depending on the quarter, you can have a different sector leading. It is chemicals one quarter, there is food and beverage, there is the whole distillery and edible oils and sugar. So the sectors keep changing, but if I take a look at the whole year as such, feels like every sector out there has done well. There are one or two sectors like textiles, which may be going through a bit of a tougher run, but in aggregate, it's a very widespread multi-industry strength, which gives us a bit of confidence as we look ahead as well.
Mr. Bhandari, good morning and thanks for being with us. Can you tell us a little bit about the green hydrogen opportunity? Who are the targeted customers? I'm asking you because, I mean, this is the buzzword lately, right? Are you looking at any progress in the next 1 year? Also, will these projects be margin dilutive for you on a blended basis? If you can give us some color on that segment.
Actually, I really don't know how to answer any of those questions. We know it will happen. I don't think you should expect anything big in the next 1 to 2 quarters. 1 year, perhaps. What will that look like? What will the margins look like? Just too early to say. Yeah, these are all, it's like looking at the EV industry 5 years ago and saying, what will that look like today? Very different. I would just say for all of us, it's an important and meaningful step to take. Very difficult to say what even a year from now would look like. Yeah, unfortunately.
So the reason I'm asking you is because, you are seeing a slowdown in your traditional orders, right, in the traditional business. So I'm guessing that the focus will now be on some of these newer verticals, whether it's green utilities, waste to energy, chemicals, etc. Which of the new segments could be a big business driver for you in the next 2 to 3 years?
Okay, so I'll answer that question in two parts here. First, Thermax, maybe even before COVID, was more of a 6,000 crore run rate business. Yeah, that is now something like 9,000 crores. So when we're seeing some amount of slowdown in our traditional segments, that slowdown is at a much bigger number than where we were previously. Yeah, so it's a very different discussion in that sense. The question then is, what are we looking forward to so that we continue to be in this growth trajectory? And there we have a lot of new segments. Hydrogen is just one of them. But if you will see already for us, biomass and everything relating to biomass has been propelling growth. Waste to energy, we have been investing extremely heavily. The whole build, own, operate models starting to get into solar in a lot more meaningful way. And then as we look forward, hydrogen would be one of those items, but there are several things on the growth side that are relevant to new energy. And this is without even touching water, where zero liquid discharge, effluent treatment, seawater RO, which is desal plants. So across the board, we see a lot of new trends and new technologies that our customers are asking for that we can provide from our portfolio.
All right, Mr. Bhandari, let's focus on a couple of aspects then. Industrial products, industrial infra. Now, industrial products, as a percentage of your revenues, I think last year was around 40%. In the past, I think you hinted that this contribution is likely to go up, maybe to the halfway mark. Where do you see this number stabilizing from around 40% that you got last year? And I ask you this because that's what could give a bit of a fillip to margins as well. Larger segment operating at close to around 80%, 8% odd margins. Your talk only on this particular vertical.
Yeah, I would say that the reason we are disclosing these segments, because this is how we are operating the business internally. So now how we are operating them internally and how we show them to our investors and to the world at large, both of those are aligned. That said, there is nothing that says that we will not grow large orders or chemicals or anything else if we see the opportunity. So we are not targeting the mix as such. Yeah, each segment and each portion is extremely important, has its own story and has its own growth potential. On the project side, while the big projects may not be there, we're doing a lot of very interesting small to medium sized projects, and a lot of the waste to energy bit also falls out there. So if we see a lot of growth opportunities out there, we won't slow down. The mix is not something that we are targeting at all. We are looking at each individual bit and saying, how do I grow that individual bit? So in the industrial products, our expectation is that we focus a lot on services, on digital, increasing penetration through better management of our channel network, better relationships with our channel network, and then continue to add newer and newer products out there. What that will look like in the future in terms of mix as part of the overall portfolio, not really something that we are targeting internally.
Okay, before we wind this down, then two numbers is what we're asking. We started the interview with that. What kind of a growth number for the consolidated entity we're looking at with margins as well? You've given us a sneak peek with that 9,000 crore number odd. What is the revenue growth we're looking at and a rough margin band, sir?
We have always stayed away from talking about what the future will look like. I think on the revenue side, our backlog, and that's always, if the environment is stable, that's a good judge of what our revenue number will look like. On orders, we are expecting growth, and that's our, continue to grow a lot of elements of our base business as we get towards the second half of the year, get some bigger projects back into play. Meanwhile, build out some of these newer platforms that we have created And all
Ashish,
three
Ashish,
of them together continuing to keep us on the growth.
25% plus?
I won't share any
top line?
specific numbers.
Okay, you did over 31%, I think 23 over 22.
Mid-teens?
So, mid-teens, huh?
Give us a hint. Give us a broad band at least, Ashish, before you go.
No. We'll stay away because that's a very slippery slope you're taking me down.
We tried.
There's no recovery from that. So we'll stay where we are.
Okay, I mean, you've learned well. I mean, but thank you very much, Ashish. Appreciate you joining in. But it's interesting and reassuring to hear that what you're saying is large ticket orders are not that many. Actually, you don't have, we're not working on any unlike the last quarter, but smaller orders, it's very widespread coming across sectors, and one of the other sector keeps firing, and it's much more durable as compared to the cycle driven by very large chunky orders. Thanks very much for joining us. We'll take a quick break here.